Hey everyone, Douglas here, and welcome back to the MMT Macro Trader. And today I'm going to do kind of a new style of video. I've never really done these before, but the goal is to hopefully get a few of this style of video, kind of a market recap, a market update style video up a couple times a week, where I do just kind of a quick overview of any kind of major news events, major happenings in the world of finance, economics, and investing, and kind of break it down through that MMT macro lens that I've been piecing together for the better part of a decade now. Yeah, and just kind of give my thoughts on what's happening in the day. So these will be, kind of relatively extemporaneous, relatively kind of broad, but still hopefully hit some high points. Anyway, today is kind of a pretty good day to be starting a series like this, particularly because of kind of the major news event of the day, and that being the blow up of FTX, the Bitcoin platform, Bitcoin exchange, losing 90 some odd percent of its value and effectively wiping out the wealth of I forget the guy's name who owns it with the kind of curly afro hair. Either way, the exchange blew up. Binance purchased it, or at least is buying some of the assets. I don't exactly know the details of what all took place, but either way, the exchange blew up, and what's kind of interest to me is not so much kind of the implication on the crypto space. I'm not a big crypto guy, really quite crypto skeptic. I've talked about crypto in the past, and videos that I've done in the past. You can look them up on my channel. But what really does kind of interest me the most and intrigues me the most is the correlation that we saw today between Bitcoin as it was collapsing and the S&P 500. And I'll switch to that chart real quick, kind of show you what I'm talking about, and just kind of preface this, give a little bit more context of why this is a bit concerning to me. I've long kind of thought that there is, for some reason, not a systemic risk, but kind of a systemic entanglement, we'll call it, between whatever's happening in the Bitcoin world and kind of the rest of the risk asset world. We've seen, especially during the sell-off that we've seen over the last year for the S&P, we've seen it kind of happen in lockstep with Bitcoin, and oftentimes the big drops in Bitcoin have been leading what we're seeing happening in the S&P in terms of the selling for the majority of the past year. I'm actually not the first person to point out the correlation between the S&P and Bitcoin, but it does seem like that there's some correlation not only between the S&P and Bitcoin, but also between kind of the overall credit cycle that pushes the S&P 500 higher, and it kind of drives the economy as well. That same credit cycle seems to influence and seem to be very closely associated with the price of Bitcoin. Again, I've made a video about this in the past and how it relates to Tether. If I can remember when I post this, I'll make sure and link it either in the pinned comment or to the description below. But either way, my theory is somehow there is this kind of entanglement, this linking between whatever's happening in the crypto world and on these exchanges and the S&P, and whether that is the more likely scenario where some of these exchanges have risk assets on their balance sheet that they're needing a fire sale that then kind of leads to enough dumping of whatever assets they have to trigger a bit of a volatility event in the S&P or just stocks in general, or God forbid, this is maybe a slightly worse play out in terms of volatility the S&P might face if, for some reason, kind of investment institutions have major exposure to the price of Bitcoin. That could also get a little concerning. I have no reason to believe that's the case. It seems like the first option is the more likely. But either way, there is that correlation. And what I thought I'd do is show, and again, this is kind of what concerned me throughout the day. What really jumped off the chart to me is the very strong correlation between really the initial selling that happened today. So I have the S&P in blue, and then Bitcoin in the bars here. And really, as we started the day out, there was just a lockstep a lockstep correlation between Bitcoin and then the S&P, with the S&P a little after the afternoon just completely giving way and selling off, along with Bitcoin. And the fact that it looks like Bitcoin is having kind of a Minsky moment here, maybe it is just FTX that's going to blow up here. Maybe there's something deeper. The Binance CEOs come out and said, they have firm foundation, they're solid balance sheet. What's happened with FTX isn't going to happen with them, and I guess would be for now. He's probably right, but if there is more to this, and we continue to see Bitcoin kind of have these fire sale moments, there's a bit of concern in my eyes, just kind of given the correlation that we might see some more volatility happening through this blow up. Now, I want to be clear that by no means do I think this is a Lehman event for the rest of the financial system. It might be a Lehman event for Bitcoin, but this is not a Lehman event for the rest of the financial system. This isn't a Bear Stearns event by any stretch of the imagination, but for the financial system, it likely is the beginning of a complete meltdown of Bitcoin, at least maybe in terms of the next leg lower. But given the fact there's this correlation, given the fact that I think there's a pretty logical case to be made that there is some, again, we'll call it just kind of an entanglement. We'll call it, I don't know exactly how to express it, but there seems to be some balance sheet overlapping between Bitcoin and risk asset stocks. And if Bitcoin really collapses here, we could see that volatility momentarily spill into the equity space. We'll see how this plays out. Again, I'm not a big Bitcoin guy whatsoever. I mean, during the craze, it was fun to look at all the meme coins and whatnot. But Bitcoin was always destined to kind of end up in the gutter. Now, I do think the crypto, particularly Bitcoin, will continue to have some function, some purpose, some existence into the future, even if we do get a big washout here going forward. I mean, in part, there still is quite a lot of uses for Bitcoin, mostly nefarious. It's a very easy way to get money onto quite a few platforms, gambling platforms and that sort of thing. It's very easy to use for other various nefarious means that we won't go into. But I mean, you get the point. There still is some use to it, and it's been highly financialized as well, which means it'll be a while before it goes away, even if this is kind of the big collapse. But I think the bigger takeaway here, and particularly kind of the MMT insight that I want to give for the night, is that Bitcoin is a great example of what happens if we were to ever go back to kind of a hard commodity-backed currency, where in order for there to be kind of an elastic growth of the money supply, you need a credit expansion, and then you end up having a credit only, or a true credit economy, and the dynamics that played out. Now, Steve Keen, one of the people that I've learned more from than really anyone else, him, Warren Mosler are the two big names that come to mind. Steve Keen's done a lot of work on the dynamics that are at play. I think he calls it his debt deflation model. Either way, he's building on the works of the likes of Hyman Minsky and the kind of an original heterodox school. And pretty much everything that he would anticipate in his models, or that is modeled out in terms of what a true credit economy looks like, and the boom and bust cycle that occurs, is exactly what we're seeing playing out in the crypto landscape. You end up getting eventually this need for the underlying asset to continue to grow, in part because that asset itself, the price of that asset itself, is what is keeping afloat the actual asset side of the balance sheet on the players, whether it's the exchange or the financial institutions that are surrounding this thing. And so you really get into what Minsky called this Ponzi finance scheme. It's exactly what we saw today with FTX. Now, look, this happens in the regular banking system. This happens in the banking system that we have. It happened in 2008. But when you do it in a completely unregulated way, in a way where you get this money creation that is outside of kind of a bank charter, in a way in which there's no backstop for these assets, there's no buyer of last resort for these assets to be picked up to at least stop the complete collapse of the system, This is what you get. You get a complete collapse of price and a complete collapse of an exchange, and kind of the bank run essentially that we saw with FTX. Now, I do want to be clear too. I don't want to come off as kind of claiming that the monetary system we have today is perfect by any means. But what I don't want to do is ever go back to a kind of hard currency, kind of commodity-backed based currency system, because I think the dynamics that we've seen play out over the last few years in Bitcoin are exactly sort of the things that we'd see if we ever kind of went backwards. And I do think there's a really good case to be made for kind of a soft currency dynamic. And it's worth pointing out too that we are at a soft currency dynamic as opposed to a hard currency dynamic. So effectively to summarize, I don't want to absolve the Federal Reserve. I don't want to kind of claim that the federal government itself is somehow this super efficient entity at anything. That's not what I'm trying to argue. What I am trying to argue is that the other style of monetary systems that we could take on just leave us with dynamics that are really unfortunate, and we're seeing that get proven out by the price action that we've seen in Bitcoin. So again, look, we'll see what happens with Bitcoin. I won't even make a guess here if we continue to see Bitcoin collapse. I will say, as we go back to the daily chart here, just from kind of a purely technical perspective, breaking down from this 19,000, 20,000 support that we had looks kind of nasty. And like I said, it seems as though Bitcoin has followed the credit cycle quite closely. So maybe this is finally just where the S&P and Bitcoin finally diverge and go their own way. And Bitcoin just kind of goes on into relative obscurity, or this is maybe a bit of an early omen to some more volatility in the equity space, and we'll eventually maybe want to wait to see these two meet in lockstep again, but that remains to be seen. So those are my thoughts, at least right now, on Bitcoin. I do have a few more things that I want to talk about, at least before we wrap things up. Obviously, for the market specifically, and the S&P specifically, heading into the rest of the week, the one thing I did want to touch on is obviously tonight in the U.S., elections are ongoing. We'll start to get results heading in through the remainder of the night and into tomorrow. And I really think that we could end up seeing this election night let me put it this way: it has the potential to be a bit of a springboard into another rally here for the S&P. In mid-October, a couple weeks ago now, I made the video about how the window for the bulls was there. We had some kind of macro data dropping. We had OPEX in October, and that is right when we saw that low on October 15th happen, or 13th, whatever day it was. And we've really seen the market at least rally off that low. And I think we're at a bit of a mini window of opportunity with the election, in part because one of the things I've seen, and you can kind of see this play out in the GEX here. You can see this play out in volatility risk premium. You can see this play out in just the amount of put action that continues in the market going forward. We just haven't seen that negative gamma reinforced selling market give way yet. And I think it's been a pretty good hypothesis to this point that maybe a lot of those puts have been waiting for the election and any potential shenanigans in terms of what plays out with the election as kind of the reason why there remains some insurance in the market that's really been dragging this market lower. So maybe the election is finally the thing that's going to really release a lot of the hedging activity that we've seen, and let this market kind of finally rally. And I'll tell you what, if this market can spark a rally, I mean, I could easily see us make up a lot of distance real fast in the S&P 500. I mean, I think it wouldn't be that big of a surprise to get back above 4,000 in very short order, and then some, even by the end of the year, just given the dynamics of how this hedging stuff plays out. Again, this event, the elections, would be kind of that window of opportunity for the bulls to really take over. In the meantime, given the way the dynamics are, expect some volatility going forward. I mean, obviously, we saw a very highly volatile day on a day that you probably would have expected to be relatively low volatility, given the fact that there would be kind of the calm before the storm heading into the election. But certainly, as the hedging, any hedging that was taking place prior to the election begins to unwind or gets rolled into, whether that's OPEX next week or whatever the next kind of macro event is that has traders worried. As that happens, one way or another, we are going to get some volatility to play out. And it's one of those things where if you can get a bit of a spark of a rally, you can really get quite the short squeeze to unwind. So that is what I'm going to be looking for as the election results play out and as the market kind of digests that. And of course, we're doing all this in light of a major blow up in crypto, which seems to be affecting markets to some extent, as we saw that strong correlation today. So those are my thoughts on today's action. If you like this style format, let me know in the comment below, or in the comment section below. I'd love to hear your feedback if this is something that is worthwhile to you and I should keep on doing. And other than that, if you are new here and you like what I'm doing here, make sure you hit subscribe, turn that notification bell on as well. And if you find this video particularly helpful, make sure you give it a thumbs up on the way out. And the final thing I have, if you are an active trader, active investor, and you like this MMT process, check me out over at my Patreon page, patreon.com/MMTMacroTrader. That's where you're going to get all the super in-depth analysis, especially, again, for the active trader, active investor. And for the month of November, for the first time ever, I am running a promotional period here for $25 a month. It's normally $70. If it's something you're interested in, hop on now. You'll be locked in at that price forever. I will never raise it. In December, I'm going to break things into 2 separate tiers. You'll continue at the highest tier and get the daily updates, get the weekend macro update, as well as the technical analysis updates throughout the week. So check that out if it's something you're interested in. Otherwise, that is all that I have for tonight. So until next time, good trading, everyone, and we'll talk to you then. Bye-bye.